to the stimulus. I see them maybe subtracting stimulus down the road.
All right, a lot of different points of view. All eyes, of course, are going to be on the Fed, but let's go ahead and bottom line Jim's trade with the risk reward here. Jim is buying gold at $15.78. He's looking for a move up to $15.96. And remember that each $1 move in gold is worth $100. So this trade risking $1,200 to make a potential $1,700 bucks. The stronger dollar not just hurting gold. Oil has suffered its worst two-day drop in 3 months, and the pain coming as copper has been under pressure as well. So here's the question. Is the fact that both oil and copper are selling off together a warning sign for stocks? Peter, let's go ahead and start with you. You mentioned the sell-off in housing stocks. What do you make of the price action today?
Well, remember, we had a pretty big run. We were sitting near the highs in the oil market. So, you've got a lot of short-term money in there. You hit some stops when you start to come down. So I think it's a healthy correction. I think oil prices are going higher. You just mentioned the currency war. America started the currency war, and we're going to finish it. Unfortunately, we're going to win that war, which means Americans lose, or anybody that has dollars. But you want to buy things that central banks can't print, and that includes oil and gold. And I think these corrections should be bought.
Grizz, what do you think?
Well, I think that we still got a little bit more to buy that correction. I think we're going to test the $90 area in crude oil. I think when you saw the numbers come out this morning about the jobless claims, they got bad again, or getting bad again. And I think with the numbers out of China over November, December, and January, that was the demand was coming from them from oil, and now they're kind of backed off a little bit. So I could see us correcting a little bit more, but I definitely do think that crude oil hits $100 before it hits $80, but I'd like to buy it when it gets to 90.
All right, so what's the trade right now?
Well, before we got on air, I sold crude at 93.5. If it gets back up there again, I'd sell it again. 93.5, I've got to stop at 94.60, and I'm looking for a move down to 91.20.
All right, Jim, do you agree? Does the technical picture that you're looking at support Grizz's trade?
Yeah, I actually think crude probably goes higher from here. I think the bottom line is this. 5 of the global central banks have been more aggressive in devaluing their currency, and right now the Fed looks somewhat responsible in comparison. That could shift any time. Like Peter said, the U.S. started this currency war. I think the U.S. could pick up steam and traction. I think that could happen as early as next week, in which case I think crude rallies a bit. Could it get down to 91, 91.5 in the meantime? That's certainly possible, but I don't think it goes much below 91. So I agree with Chris that 100 is before 80.
Okay.
Yeah, Jim, I'll tell you, there's a lot of crude oil out there. Basically, what we've done with the Seaway pipeline opening up is move a glut that we had in Cushing to a glut that we have now in the Gulf Coast.
Every time I try to trade crude from the real... Right, but every time I try to trade crude from the bottom-up supply and demand story, I always get washed out by the bigger macro dollar story.
Well, then look what equities are doing right now. If the equities are weaker, crude is following along with it.
Well, no doubt, but they could move independently based on where they've been in market position. I actually think equities are going to trade down to $14.90 and probably gain some traction there, or some support there.
Hey, Peter, I want to get your take because I'm looking at the oil price right now, $92.92 for WTI. So what the market is telling me right now with the sell-off today is that they do believe that quantitative easing is going to back off, that potentially things could slow down. But you just made the case when we were talking about gold for more money printing. So what do you make of the price action to support your theory?
Well, I just think all these assets are trading in tandem. So, gold was kind of the first market to break short term, but you have other commodities, you have oil, now you have the stocks rolling over. Remember, we were making multi-year highs on the NASDAQ and the S&P just yesterday morning. And then look at, how quickly things have rolled over. So I think you're getting these moves, they're happening together because traders are making the same bets across markets. But I think fundamentally the case for commodities is very strong. I agree. There's a little bit more downside, obviously, to some of these markets, but you want to be looking for buying opportunities, not selling opportunities, because I think the long-term trends are intact. And when the world appreciates the fact that the only thing that stands between the U.S. economy and a severe recession is the Federal Reserve, and it can't stand there forever. But in the meantime, they're going to print money as long as they can get away with it. You're going to have this quantitative easing continue, and prices are going to rise. And the only reason these other currencies are fighting this foolish currency war, in a currency war, the object is to kill yourself. So the way to really win is not to participate. But they're trying to keep their currencies competitive with the dollar so they can export to a nation of consumers that can't really afford to buy anything. Okay. The whole thing is nonsense, and I think they'll surrender in the war.
Okay, so it sounds like what you're saying is that there are going to be bumps in the road, but you are bullish on commodities, gold and oil. Let's go ahead and bottom line Grizz's trade, though, for the viewers. Get that risk reward for them. Grizz is selling crude at $93.50. He's looking for a drop down to $91.20. Remember that each $1 move is worth $1,000 in crude futures. So Anthony's trade risking $1,100 to make a potential $2,300. Well, the risk-off that we're seeing in commodities hurting stocks as well. The S&P futures dipping below 1,500 today and set to suffer its worst two-day stretch of the year. So, Jim, markets can't go up forever. Is this a healthy consolidation that we're seeing? Is this the start of maybe a more serious pullback?
Well, I'd rather see a bigger 6, 7, 8, 9% correction. I don't think that's in the cards, though. I think what we're seeing here is a significant shock into the risk assets based on what the Fed said yesterday. But as a couple days wear on, we realize what Peter said, and perhaps the Fed isn't that serious. So I do think there's weakness in the market, too. When I was thinking about trading it this morning, I wanted to see a move up to 1505 in the E-minis, and I was going to sell it there. And I think it's going to trade back down to that 1490 level, which it traded to a couple weeks ago and seemed to find good support there. So 1491 was my objective. If it goes above, let's say, okay.
No, go ahead. Give me the trade.
Yeah. No, if it goes above 15, 16 is where I'd throw in the towel and think we're going back up to the highs.
Okay, Grizz, want to get your take on the S&P as well. Do you agree?
You know what, Jim? I could agree with you on that one. As you can tell, I'm a bear on everything today. I want to sell it all. But, yeah, I think the equities definitely have a little more room to correct here. I definitely think that we've seen some headwinds in the economy. And let's not forget, in 2 weeks we have the sequester talks. That could definitely throw a headwind there.
Sequester talks definitely could be an issue, Grizz. That's what I'm hearing out there. But also I wonder, we talked about the issue of European equities down today. Peter, do you think that the global sentiment out there has sort of been put on the back burner but now coming more into the foreground? Do you think that people are selling off because they're worried about what's happening around the world, not just here?
You know, it shows you how tenuous the rally is. I mean, the Fed didn't say anything. The Fed said the same thing it's always been saying. People are looking for an excuse, obviously, to take profits. There's a lot to worry about. But I tell you, the sequester, that's not what we should worry about. The problem is we're not going to do the sequester. They're going to postpone it indefinitely. That's what we need. We need a sequester. The only problem is it's too small. We need massive cuts, real cuts in government spending, not these trivial, phony cuts that have to do with the sequester. But unfortunately, we're not even going to get that, which means we get bigger deficits, more money printing, and again, it goes right back to the case for buying, not selling gold.
Hey, Grizz, let's go back to the trade for a second. Are you liking these levels?
You know what, Jackie? I'd rather just be honest with you. I would just sell it right now. I think that we started a correction. We're going to get more of it. I could see 1475 in the S&P. I don't really think it gets above that 1510 area. If he wants to sell the 05s, that's great. I would agree with that. But, yeah, I would jump in this right now. I see 1475 around the corner. Okay,
1475 around the corner. That is a different view than what Jim is looking at. Let's go ahead and break it down. Last time on the risk reward here, Jim is selling the S&P at 1505. He's looking for a drop to 1491. Each point in the S&P minis is worth $50. So this trade risking $550 to make a potential $700. All right. That's going to do it for today's show. My thanks, of course, to Jim and Grizz, and, of course, to our special guest, Peter Schiff, as well. Always a lively conversation when he's on. And remember, if you missed any portion of the show, catch us on demand, futuresnow.cnbc.com. And don't forget, browse the website. We've got the tutorials there, the trader blogs. They're really great. And I know I don't have to remind you, like us on Facebook, follow us at Twitter, a little shameless self-promotion, at Jackie DeAngelis, at Anthony Grizz, and at Jim Urio. All right, that's what you're going to get from us this week, but we'll be back next week, Tuesday, 1 p.m. Eastern Time, right here, futuresnow.cnbc.com. See you next time.